Good afternoon, everybody. This is Thomas Wood with Microquant. Once again, taking a look at the trades of the day from the live trading room. We had another great day, back on a roll. After having our fourth down day in the past 13 weeks was yesterday. Today we were up once more, which is a good thing. So getting back in the saddle, getting things moving once again. We had several really good trades, but I'm just going to highlight three of my personal favorites, which were in the British pound, in the euro, and in coffee. Now, first in the British pound, we had a long that ended up allowing us to take around $300 a contract. You could have taken more if you got out a little bit later. When I got out and closed my position, I was up around $300 per contract. Now, the reason we took this trade, we had a bullish divergence on the daily, where we had lower daily prices compared to the previous low, but we had a higher indicator value. If you look at our MQ momentum, our momentum indicator was slowly climbing, and it actually rallied up very nicely. Ended up being a great trade, like I said, about $300 per contract. Now, we actually pinpointed our entry off of a 60-minute chart, and that was from a bullish divergence here, where we had lower low prices compared to the previous down move with a higher low indicator. The second entry we had was again just about lower low prices, or equally low prices, just a few ticks up from the low, with once more a higher low indicator. So a double bullish divergence gave us the okay to get long. We covered right up here next to the opening, the day's opening. We were looking at that as resistance, which is actually falling off of right now, but again, like I said, took around $300 a contract out to the upside in the pound. The next trade that we had that I would consider one of the trades of the day is in the euro. We had the first trade was about $500 a contract on this short. We got short. We had really good fills actually with this. Got short right up here and moderately overvalued. We had this initial rally and then came back up and got moderately overvalued and couldn't even get up into significantly overvalued on the second rally. And if you looked at our momentum indicator, momentum was really dying off. So we went short, risking the high. It ended up falling, and we covered right at the bottom in that red tip where it's significantly undervalued. And that ended up being about $500 a contract there. We also tried getting short coming up against these highs here once more. Up getting stopped out on that trade. That was fine. We were only risking about 5 or 6 ticks at a time. The second opportunity we tried getting short was significantly overvalued, which is the upper red portion of this bar on the 15-minute chart, and that was true bearish divergence, where we eclipsed the previous highs or broke above them and then had a lower high indicator there. You can see the histogram was lower, the indicator lines were lower compared to the previous rally. Gave us the okay to get short, and then I covered a little prematurely. I got out at plus $120 a contract, I believe, but if you held it the entire way through down to moderately undervalued, you could have taken out about $250 per contract. Now, the best trade of the day is going to be in coffee. We actually got in coffee, had an amazing trade. We were in within 1 tick of the low of the day. We were only risking about $150 per contract with our stop, and coffee ended up rallying and gave us the opportunity to take out around $1,200 per contract. That's not even going all the way up to the high. That's getting out off of the high, and that's not using the best low or the actual fill price that we had, or that I personally had on the trade. Now, you could have also traded this. We traded it off of a different strategy. We shorted up here at the end of the trading room off of this reversal pattern. We call that a red tail shooting star, one of the value candlesticks that we trade. That ended up being a nice trade if you got out down near the 8 EMA with the very aggressive trade strategy. Then you would have taken around $300 a contract out. If you had taken the long initially off of the inverted hammer or the golden hammer, where it's a completely moderately undervalued hammer, inverted hammer pattern, then you would have gotten in at the open of this bar, risking the low. And that would have been a great trade as well. These are both candlestick trades that we traded, and then you would have exited as soon as you had the reversal up here, which would have given you about $1,000 a contract. Not bad for only having to risk about $250. The other reason that we got long in coffee, first off, we looked at a 240-minute chart and we said there's a great bullish divergence here, where we had lower low prices. You can see we broke through the previous lows, the lows from yesterday, and then we had a higher low indicator and a higher low histogram on our momentum. So we had, okay, we have a bullish divergence, we're moderately undervalued. So that was the first sign that, hey, this market could be getting ready to turn. The second sign, we drill down and you look at a 15-minute chart. You can see that the lows were lower than the previous lows, With a higher low histogram reading on our momentum, the indicator had also started to roll over, and we had just stalled out, looking like we were forming support here. So it gave us the okay to get long, risking the low. That's one of the reasons that we did. Ended up being the trade of the day. Like I said, had the opportunity to take about $1,100 per contract out to the upside. Well, that concludes today's trades of the day. I hope everybody enjoyed it. Look forward to seeing everyone tomorrow morning bright and early in the trading room, and we will continue on hopefully with our winning streaks. So until next time, happy trading.